Well, hey, everybody, and thanks for joining us. My name is Jake Milstein, and I host our events here at Critical Insight. And if you haven't been to our events before, we do a fair number of them and invite a lot of people to talk about the issues that are impacting InfoSec and InfoSec posture in organizations around the US and around the world. And today, we are going to do a cyber insurance change webinar, which is why you're here. And why are we doing this? Well, we're doing it for a couple of reasons. Number one is a lot has changed in the last year. I looked, and the last time we did a specific webinar about cyber insurance was 2 years ago. And boy, oh boy, one of the things we're going to see today is that a lot has changed in the last 2 years. And I'm sure you all know that. You're at organizations, looking in the audience here, we have banks, we have retail, we have healthcare, we have cities and counties, we have all sorts of folks here. And I'm sure you've seen your cyber insurance change dramatically. And so we're going to talk about it today. And I really appreciate everybody being here. So a couple of things to know. Over on the right-hand side of the screen is a chat. Let us know where you're joining from. Say hi. Love to see you all. There's a little bell at the top. If your chat is going beep, 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 every time somebody puts something in there or ding or whatever noise it makes, you can do a little chat and it'll make that stop. Everybody who registered will get a recording and we'll put it on our YouTube channel. So if you want to rewatch it, if you get called away, I know a lot of you are IT directors who just never get interrupted. So, you'll be able to be here for the entire thing. And if folks want the slide deck, we will get you the slide deck as well. But thank you for joining. So who are we? Critical Insight defends critical infrastructure against cyber attack. We help organizations prepare for a cyber attack, detect one quickly, and respond decisively. And we help a lot of our customers with their cyber insurance. We don't sell cyber insurance. We do, sometimes we do make referrals to cyber insurance and insurance brokers. We do end up having some insurance carriers, refer us into incident response stuff. And so we play in this arena, quite a bit, even though we don't offer insurance. It comes up all the time as it comes up in your lives. We got a great group joining us today. We have Brian, Peter, Mike, and I'll be the one asking questions. I'm going to have them introduce themselves. Brian, go ahead.
Thanks, Jake, and thanks to Critical Insight for hosting Mike and team. My name's Brian Hurd. I've been in the community now going on 31 years, since about 1993. Quick version, founded the Cyber Counter-Espionage Program at NCIS back in 1994, was EDS's Chief of Cybercrime, now HP's program when HP bought EDS. Did a bunch of stuff for counterterrorism and was the chief identities for U.S. watch listing. Microsoft's first chief of cybercrime intelligence for the corporation. And then now I work for Aon, the global insurance company. Honored to be on and representing the community along with Pete over at Gallagher. Over to you, Pete.
Thanks, Brian, and thanks, Jake, for hosting today. My name is Peter Simonson. I work at Gallagher. I'm a cyber insurance broker. So I work with clients on placing their cyber insurance program, also assisting them in getting ready for the cyber underwriting, helping them with their controls, and then also working with them on the back end when they have claims.
Awesome. And Mike is, if people don't know Mike, he's a former CISO of the city of Seattle and then founded Critical Insight. He is our CISO and our most frequent talker on our panels. Which, Mike, you should put that on your LinkedIn. And my name, as I said, is Jake Milstein. And if folks want to email anything, or if you want something that comes up today, jake@criticalinsight.com is my email address. And also, one of my favorite things to do in our panels is interrupt the panelists and ask questions. So go ahead and put your questions in the chat as we go. I love asking your questions. Of course, I came with questions, but yours are going to be better. Okay, so let's look at the problem. This is not, for anybody who's been in cybersecurity for any amount of time, this is not a surprise. This is 2024's largest U.S. breaches, and we are only just out of Q1. And these are the first 2 months. I mean, we already have, 384 million records breached at one company. And then obviously the number 6 on here, Optum, has affected a lot of our healthcare customers. Optum owns Change Healthcare, and we're going to talk about that one a little bit. But this list is already alarming for anybody in the InfoSec community. And you can see in this chart from Aon, hey, ransomware is going up and up and up. There was a dip, and then it's going up. And it, it has made things significantly worse, and Mike, let me start with you. I think you have seen, after it seemed like there was a lull there, a real uptick across all industries.
Yeah, absolutely. And, so you're talking about ransomware here. The knock-on is also the exfiltration of records to use as an additional extortion method. And so the number of records that's been disclosed is also off scale. And the combination of these two things and the financial hit that we're taking is, it's hurting. It is hurting everybody. And, part of the problem is that statutorily, we've created a condition where following unauthorized disclosure of protected information, the class action suits roll in and the Federal Trade Commission comes in enforcing the False Claims Act. And so this tells part of the story. Part of the story is the financial damage done just from the litigation and, the fact that we've made all of this possible. And I think ransomware is part of the story, but if you look at it in totality, the problem is a lot bigger than just ransomware.
And, Brian, looking at this, I know so, what Brian said, Brian does a ton of incident response. He's seen things in all industries. When we look on the right here and see healthcare as number 1, manufacturing number 2, professional services is 3, IT services, does that jibe with what you've seen?
Yes, and one of the other trends we're seeing is that business email compromise and associated invoice scam is even more economically impactful, but a lot of those don't make the front pages. So as we talk about this trend, we saw that dip with the unrest in Eastern Europe, which may have taken some of the ransomware gangs offline and aging out of some of the old NSA tools. But we are seeing that kind of 1-2 unfortunate punch of ransomware where exfiltration is now a big problem. However, we'll talk about later, it's lesser of a threat because if you can't decrypt your data, you can't get back to business. If somebody has a copy of your data, it's a different type of extortion, but it still sucks.
And Peter, from what you've seen, does this match what you've seen in terms of claims?
It does, Jake. I think I'd also add public entities to that list. They've been particularly hard hit, both on a severity standpoint, but also with some frequency. When we see sectors like that, manufacturing is another one where maybe they're a little behind on their cybersecurity control maturity as an industry. Then they are more susceptible to some of these more severe ransomware attacks. And the results of those can have large financial impacts and operational impacts on those companies.
Yeah, I mean, are you? I guess that raises a question here. We don't see financial institutions on here. We don't see banks. We don't see credit unions. Is that because they have more regulations and are far ahead, Peter, on their cyber posture?
I definitely think that's part of it. As regulated industries with a lot of PII, they've been dealing with these issues for a lot longer. It's been on top of their mind. So they're just a little farther along in their maturity than some other organizations or business sectors who are still, this is just kind of coming to their shores.
Yeah. And that, that matches with, there was a hospital I was talking to, and they just hired an IT director who came from a credit union, not a giant credit union, a regional credit union. And, he was talking about his first 3 years will be getting the hospital to be anywhere close to where the credit union was, just in terms of maturity. And yeah, I with you was surprised on this not to see cities and counties as the most impacted industries. Um, but I mean, I think we have seen a lot in education as well.
Yes.
Yeah.
Oh, absolutely. And one other note on that, I couldn't include them all or the slide would be too long. And then the other trend I'm seeing that Peter, I believe, is also seeing is that mid-market, the 500 million to $2 billion companies are getting hit a lot harder because they have cash, but not 200 people on their IT security team, like you see in the major global financials. So there's a lot of details behind this slide, but mid-market companies are now getting hit pretty hard as well.
And Brian, so in mid-market, any specific vertical or just, sort of all across the board?
Unfortunately, law firms and consulting firms are getting an undue amount of attention because they hold the secrets of others. So you can hit one client and use the extortion of their secrets of other clients, or you can try and get to those other clients vis-a-vis like a Solar Winds. But on the professional services side, it's because they can then resell the confidential information to a bunch of different markets or extort each client kind of thing.
Sure. And I think I've seen a lot about law firms getting attacked in the last year. Mike, you had something you want to say?
Yeah, I want to make one more point about this slide. Part of what you see in this kind of vertical slope here is the change of the criminal gangs, largely Eastern Europe and Russia, moving to an affiliate and as a service model, so that anyone now can monetize crime without really having any skills. And this is leading to a much larger domestic problem. Specifically, Gen Z is getting into this, and that's part of what explains that rise.
Oh, fascinating. All right. And I'm going to get back to that because of an article about the MGM breach, but I do want to get to this slide. Brian, would you walk us through this slide?
So I'll do the short version of this, and Peter would love your opinion too. So both Gallagher and Aon are representing. So the red bars here are the year-over-year frequency change in ransomware. They reflect what you saw in red on the previous slide. So the gray is the change in insurance premiums that follow. So on the left, you had a bunch of ransomware events. We had to pay out a bunch of claims. The market hardens. Two things happen when a market hardens. Underwriting becomes more stringent, the controls needed to qualify for insurance. We'll talk about that on the next slide. But what happened to correct the losses are premiums doubled, sometimes tripled, but these are the global averages. And then what we're seeing now is with this huge resurgence, the claims are not as severe. We're not seeing these $70 million ransoms because of good controls, backups and things like that, and changes in the adversaries. But you're not seeing yet that huge gray spike. We got to see how the market does and how the next few claims go for the next couple of quarters.
Yeah, Brian, I think generally this is the trend that we are also seeing. I used to be a general counsel at an organization, and when I first placed the cyber insurance policy and program for that entity in about 2016, my primary concern with cyber insurance was, is this going to pay out? Seems like there's a lot of language in here. Every policy is totally different. One thing is called, system failure. One is called a network failure. What are we doing here? And it turns out that they did pay out. They paid out a lot of claims. And that's why we saw the significant increase in premiums and underwriting that took place in 2021 and 2022. So that's that gray bump you see is where they really did a market correction and said, we've got to get serious about underwriting. Because the other thing, when I first purchased insurance in 2016, I had to answer 3 questions. Did we have encryption? What were our revenues? And what was our address? And that's all they needed. And then they gave us a policy. And as anybody on the call today can attest, who's worked now recently on cyber insurance applications, that is absolutely no longer the case. One factor that is not really reflected on this slide is we're talking here about ransomware frequency and premium. But the third factor that's really at play here is the capacity and size of the cyber insurance marketplace. And cyber insurance as a market, as a whole, gross written premium is going up 20, 30, and sometimes even higher percent per year. In fact, Gallagher Re, which is our reinsurance company here at Gallagher, they predict that by 2040, the global cyber insurance premium will eclipse the property insurance premium. So if you think about that for, organizations that have a lot of brick and mortar, they're spending tons and tons of money on property insurance. And now as we go through the next 10, 15 years, we're going to see that kind of switch over and all that money come into the cyber insurance marketplace. And so what that means is, although the ransomware frequency is increasing, we're not seeing the market harden as much because there's so much capacity in the market right now. New carriers are coming in, existing carriers are trying to increase their market share because they see the future of, a large cyber insurance marketplace. So I think that's working to offset what we would normally see, which is, a couple quarters behind large claims, a hardening of the market.
And so let me take that to a natural conclusion. When an organization is going out to get cyber insurance, it should get multiple quotes then, right? I mean, I guess that's a reason to work with a broker, so the broker can go get you multiple quotes, because the only way that you're going to get the rate you want is to invoke some competition, right?
That's right. We do see it's still a very competitive cyber insurance market right now. Carriers who have been on risk, meaning they've placed your policy in previous years, they're very keen to keep that business. And so they'll, in most cases, match the pricing or the terms of competition because they want to retain that business, again, trying to protect their market share.
Yeah.
But agreed, it is advantageous, even among great carriers and other companies, to deal with a broker who can take you to markets in the United States, in London, in Bermuda, especially for large, complex organizations and things like that, to get the best, not only premium, but all the other conditions, highly complex, how much carve-outs, how much retention or your copay, or what the restrictions or sublimits on a policy are. So all of those are remarkably complex, but that is a good process to make sure you're getting competition and a good deal.
And, Peter, since you brought it up, as you were talking about it from your former job as a general counsel, the idea that insurance companies do in fact pay the claims. I think that everybody has read the stories that, the insurance company doesn't pay the claim, that there's a war exclusion, or, they found something and didn't pay. And, I have to say, in preparing for this webinar and talking to you and Brian and talking to a couple of other folks, one of the things that you all said was no, like, in fact, there have been a lot of payments. And so, I think we should talk about that, because everybody sees these stories every now and then about the insurance company didn't pay. You're saying, no, they do, from your stand. And Jonathan asked in the chat earlier, is not responsible for a nation state attack, standard, now part of every cyber insurance policy, but Peter, you're seeing the insurance companies pay.
Yeah, so that's a great question. I saw that as well. One thing that we are seeing is a lot of activity around the war exclusions, which are in these policies. Most of the war exclusions were written, 20 or 30 years ago. They were borrowed off of property insurance policies, and they were contemplating tanks in the street. And that's not the environment that we live in. We live in an environment of hybrid war. We also live in an environment of state action here, not necessarily in concert with a kinetic war, but also just state actors involved in cybersecurity breaches and cyber events. And so one thing we do pay close attention to is the wording of those particular exclusions, how they interplay with not only whether or not you were the direct recipient of the attack, meaning, like, let's say your company is in the Ukraine and you're targeted because you're a critical infrastructure in the Ukraine, versus you're a bystander here in the US and you happen to be swept up in it. The NotPetya is the kind of classic example of that. And so there has been a lot of activity around refining those exclusions. There's a lot of differences in the language. Unfortunately, there is still a lot of differences in coverage terms between carriers. We do not have like what are called ISO forms, like you would see for like a property or an auto policy, where every carrier basically has literally the same document as the coverage. We see much more variety in those things, but they are still paying claims, generally speaking. Obviously there's outside of norm cases where they don't, but they do pay claims.
The other thing I'll say on that regard is a lot of the stories we're seeing, and I won't go into specific on Merrick or Maersk because there's a lot of complexity there. However, the cyber policies of some of those major incidents not only paid out, they exhausted themselves at $100 million. And then the client notified every single other piece of insurance they have, as one should in a catastrophic multi-$100 million event, to see if there's coverage on their auto policy, on their property policy, on their H&R policy or E&O or D&O. So there's all these, a lot of the articles are missing a bit of the nuance that some of the policies were notified after the cyber policy paid.
Oh, got it. That makes sense. So, I mean, if you're working with a broker or you're working with anybody, Brian, how far should you go to say, all right, I want to find something that doesn't have a war exclusion, or I want to find something that doesn't have a nation state exclusion, and yes, I'm willing to pay a little bit more for it. Like, how far should organizations dive into that?
Well, and this is the part about how people like myself and Peter and the group, to again represent the entire community here, this is how we interoperate. There's a couple questions and things, so I'll address a couple things. We go through a set of, for a $100 million and above company. For smallers, there's a short form, but I'll talk about the middle market. There's about 200 questions. There's a base form, a ransomware supplemental, a privacy supplemental, a supply chain or vendor supplemental. So we give you all the questions of, do you have smoke detectors, fire alarms, sprinkler system for cyber? So those of you saying that they lean on NIST, yes, but not really. The underwriter's questions will tell you what the insurance company's looking for that you have to insure you. Then the broker can help you figure out what those exclusions are, negotiate the language, negotiate price per million, et cetera. And that's the part of the process where us on the CISO side, and I was one and still am in some regards, now have to understand how insurance works. And if you think cyber's complex, welcome to the world of insurance. And you have to understand what those carve-outs mean and what it means to your program. So there is a pathway. It's not fire and forget anymore. It's not just pulse and you get life insurance. But it's not, hey, we're going to hang you to dry after a breach. If they underwrite a breach and everything was truthful in the form, they usually have to pay the claim in general.
Yeah.
And Jake, another thing too is trying to figure out what is important for a specific client or organization. We want to customize or curtail that coverage. For example, if I have a large public entity or a utility that is providing critical infrastructure, we're going to pay a lot of attention to those war exclusions because they could be a direct target of something like that. But maybe if you look at, for example, a law firm or somebody in professional services, they're unlikely to be a direct target of those incidents. And there we're looking much more about, collection and use of data. What protections are we getting for the business email compromise or the cybercrime coverages? Because that's really where their true risk and exposure is, which is what we're trying to buy the insurance for, to address that exposure and transfer that risk.
Sure.
All right. This is where I got to bring up Change Healthcare.
Go for it, Mike.
Well, so if Change Healthcare can be shown that this was a nation state act, because it's still up in the air as to who the affiliate was that actually used the ransomware infrastructure provided by the Alpha V gang. And they found somebody with Chinese nation state affiliation to have fingerprints on this. If this was determined to be a destabilizing event to go after our healthcare sector and not specifically focused on financial gain, are the insurers going to resist paying out?
We keep conflagrating nation state with war exclusion. So I want to divorce those two terms. Many acts of nation states, espionage or others, are not particularly a war exclusion. So I'm not a lawyer, but like those two terms are overlapping a bit. So, and the use of a criminal gang that sometimes moonlights with the nation state may not be a direct enough relationship to do that. So there's a lot of great surface area there. That whole war exclusion thing could be a whole nother 1 hour webinar, and beyond. So it's a war exclusion like an act of armed conflict. The NotPetya attack that hit Maersk was a Russian wiper launched at the Ukrainian accounting firms, and Maersk got hit as collateral duty because it came up. And we'll talk about it in the controls. There's a lot of jabber in the chat about medical devices and all. We'll get to that on the next slide. So for those of you talking.
Yeah, let me respond to Michael just to be clear too. One of the most important aspects of it is the attribution, and that's a very, very high burden, especially when you're talking about having to prove it in a court of law. You can't just rely on a statement from somebody to potentially bring it in. It's a high burden, and that burden's on the carriers. The carriers have to show that it's not covered. You don't have to show that it's covered. So we've been in very close contact with our carrier partners. Our claims team is working on all of our Change Healthcare claims, and we haven't heard any intimations at this point from our key trading partners that there's any, at this point, thought of invoking, any sort of exclusion that would apply to state action. Furthermore, even on a widespread event view, we haven't heard any carrier even saying that this would constitute a widespread event, because some carriers have other widespread event exclusions completely divorced from the cause of loss, but a widespread event, something that impacts a large sector, they're not even saying that this counts as a widespread event.
Okay. And there are some other things about change that I want to get to later, because I'm going to make the case that no matter what industry you're in, you should pay attention to this and how hospitals and other organizations have worked with insurance companies. It's a fascinating case. It's terrible, but it's fascinating. So, we talked about controls, and what we're seeing here are the controls in the underwriting process that cause organizations to lose insurance, to get higher rates. Brian, will you take us through this? And then I want to get to that question of, if you don't have these, will they cause you to lose insurance or just get higher rates, or how does that work?
And I want to caveat, this is not a formulaic list. These are 12 of the dirty dozen examples rolled up at a global level. So everything in insurance it starts with it depends. And before I started these, the key phrase I want you all to leave this call with that Peter and I need you to know: compensating controls. If you don't have your front door locked, but have a big German Shepherd behind it, that's called a compensating control. So each of these is not a standalone control. It is a defense in-depth tapestry of good security or good home ownership or good personal health for life insurance. If you don't have these, you won't be able to fill out the form in any way to be issued insurance. Picture this, just to level this up a bit. If you have a car and go and cut the seatbelts out and remove the airbags and go try and renew your car owner's insurance, you're not going to be allowed to do it. Or if you remove them while having insurance, you will void your insurance. But if you get in an accident and they're in place, the coverage will do what it's supposed to do. If you have these controls, when people were talking in the chat, hey, they don't give me guidance on what to do. Oh, yeah, we will. We'll give you 200 questions that explain to you exactly how to configure your MFA 6 ways from Sunday, because the question will ask you, have you turned on this? Have you turned on that? The top 4, MFA. If you don't pour it on everything like Frank's Red Hot sauce, Peter and I really often can't help you get insurance. If you don't then have endpoint protection, and then followed by great backups, and that goes back to ransomware. The encryption threat is overcome by you having backups to restore from. The exfiltration threat is then now your secondary issue. And then good network segmentation for you in the group, talking about Windows XP, Windows 7, and all the old medical devices, absolutely extremely micro-segmenting those into rubber rooms or padded rooms so they don't hurt the rest of the ship is a good idea. Peter, over to you. I mean, the rest of these are, again, the dirty dozen-ish. They vary by industry and by client, et cetera.
Brian, yeah, I think you've set this up well. And again, I can't stress enough, the most important part of doing this is you have to remember that myself, Brian has a little different background than me, but I don't speak IT. I have learned it as my second language. And most of the underwriters that are underwriting this, they're not IT folks either. And so what we are doing is taking these things that we've identified through claims data that we've seen in the marketplace, and then trying to reverse engineer how those claims can be prevented and how we can or mitigate it. And so when we come to these and you fill out that application, the better off you can get away from yes, no checkboxes, the better your insurance coverage and terms are going to be. So I'll give you an example. I was working with a school district. Do you have MFA in place for all managed devices? No. Okay. So I sit down with them and I say, why'd you answer no? Tell me more about that. And they say, well, we have it for all employee devices and all the laptops and workstations that are out there, but we don't have it on the student laptops because, a kindergartner can't use MFA. Now we have those, and of course you don't. Of course, that's a no answer. But hey, those are segmented on a different portion of the network. They don't have any privileges. So that's a situation where how you interpret those yes, no checkboxes could have a significant impact on the terms that are going to be able to offer. Because as Brian said, if you're a no on some of these, if you're an absolute no, like what's MFA, then it is going to be challenging to get you coverage in this cyber insurance market. And you really look at these two. Oh, go ahead, Brian.
No, and the other thing I think, and Peter, you and I face this a lot of times, and having been a general counsel, I'm going to throw this back to you for fun. People answer these forms like they're testifying in court. They give the least amount of information possible, and that's not what you're doing. What you're doing is you're talking to the underwriter who has to believe you're a good homeowner, you don't deep fat fry turkeys in your own kitchen, cyber speaking, and that you're not going to leave your front door unlocked every night or your car running while you go into the ATM.
Yep.
You want to make that person like you because at the end of the day, that underwriter has to say, I trust you not to burn your house down. And if you do, they're going to get yelled at for underwriting bad risk.
Exactly.
And the final bit on this for underwriters and the war exclusion and everything else you'll hear, insurance companies are seeking one thing, clarity on what's covered and what's not, so you know what you're buying. And you know that when something happens with certain conditions, you get paid. It's the law of big numbers.
Yep.
They're not trying to hide the things from you. They're just trying to define it well. And if you need insurance for that thing they've excluded, there's probably a special policy Peter and I can work on getting you.
Well, and so, I think this goes to one of the questions in the chat, which is if you answer something and then you get hit by ransomware and it turns out that your answer wasn't quite right, can your claim, like what did Peter's thing is exact, right? So, okay, kindergartners don't have MFA, but, we said we have MFA everywhere. Could you then be declined if you have something?
I'll set and let Peter spike on this. Is if you represent that in that way in the comments field of the form, and the underwriter signs the form that kindergartners don't have MFA, and you're okay to underwrite this risk, and you have compensating controls. But if you tell them you have smoke detectors and you don't, or you tell them they have sprinkler system and you don't. I have seen 2 denials where somebody's MSSP misrepresented to the client and the client signed the form to the insurance agency. That's a material misrepresentation on a legal form. That would negate any type of insurance. But if they agree to underwrite you with all those things written down, then the underwriter has accepted the risk to a degree.
Yeah, the cases where I've seen denials, it's egregious misrepresentation to the carrier. It's not, I found out that we had EDR deployed on 99.99% of the endpoints, but there was one old laptop and he hadn't logged on in 6 months, and it turned out he didn't have EDR. That's not gonna end in a complete denial of a claim. The situation is we had MFA for all employees and admins, and we don't have MFA at all, zero.
Yep.
And so those are the situations where we've seen those denials. I do want to point on real quick when we're looking at these controls really fall into three buckets. There's the prevent controls like MFA. We're trying to prevent an incident. There's the respond like EDR, where we're trying to respond to an incident. And then there's the recover, which is the third bucket: disaster recovery, backups, an incident response plan, and those sorts of things. And those are the three phases that the underwriters are looking for, because even if you don't have the best, maybe you don't have the best prevention, but you have really good response and you have really good recovery plans in place, then even if they do get in the door, they're not going to have the impact and the severity that they would if you had no controls on the back end.
Yeah, yep. Let me just add to that, because monitoring is one of the things on here, and limiting the impact of these events, right? So detection is number 4 that I would add there, Peter. Rapid detection followed by response and recovery, yes, to minimize the impact of these things. So, if your impact is, well, the help desk cleaned up a workstation, everybody's cool. If the impact is the FBI just called and all our customer records are online for sale, that's not cool. So the key there is monitoring and then integrating that with that response and recovery.
So a question, Brian.
Yeah.
So when anyone in IT looks at this, if you go out to buy MFA, you can buy it from a number of vendors. If you go out to buy EDR or MD, we are a managed XDR provider. We provide MDR, whatever the acronym you want to use is. And, we do, our SOC is in the US. We, have the best tools, but you can go out and buy a not great tool in every one of these categories. If you go and buy the cheapest tool, with a SOC in Nigeria, do you still get the same benefit as working with a good company like us?
So, and again, I'll be as general as I can. Is for these, one, this is a textual list. We also have this like laid out on a kill chain of from the front door to your bedroom of where these all fall. And again, these are representative good security. The smoke detectors you have in your house, next time you're changing the batteries every 6 months, I got it for the people from the property make me say that every time I mention the word smoke detector. There's a little sticker there that says Underwriters Laboratory Approved. Because the underwriters, that's the same underwriters. That's what that UL thing means. In cyber, while we're not telling you exactly what kind of smoke detectors to have, if you're building your own or knitting your own seatbelts, that underwriter is going to talk to you a lot more about that Nigerian SOC as compared to one that's either known to them already by brand or global or national reputation, or that they're going to underwrite a plucky local vendor. So all of those come into the play in the underwriting process. It is an interview process. It's due diligence. And if you're cheaping out on those things, it's like buying the cheapest smoke detector and putting it right over your children to protect them.
Sure.
Jake, I think you bring up that's a really good point. And two things I would say, the devil is in the details. You can say you have EDR, but if you don't have it configured correctly, it's really not going to help that much. But from an underwriter's perspective, again, keep in mind, they're not IT folks. And so if you have, top level blue chip companies that you're working with and providing services for, and you're able to say, that's who I'm using, it gives them that immediate confidence of, oh, hey, I know them. That's a good product. That's a top shelf. That's a top shelf thing. I know they're taking cybersecurity seriously and they're not cut rating or trying to patch this together as cheaply as possible.
Got it. Yeah. And we've seen that a lot. We work with some organizations that are very small and they have an EDR that, you might not be great. And so, that's something we see a lot. Or I have an incident response plan, but it's 6 years old and we haven't updated it. Right. So, do you have these things? Well, yeah, but what's the quality is something I've always wondered about. The other thing that I wonder about is a lot of insurance companies now are doing external scans as the way to, keep your policy going, I don't see that on here. Brian, how do those fit in?
Gotcha. So bottom left, 0-day vulnerability, supply chain risks. Again, this is the top of 200 some odd ish questions that we do. The external scanning helps with the low hanging fruit of, bad patching, bad vul management. And also that goes into your monitoring MSSP relationship, if that's one of the things you picked. So each of these, again, this is just, if you're going to spend your next best dollar, it probably will be on one of these 12, but this 12 is the tip of an iceberg that's much bigger about that process. And the other thing I'll say about the questions and answers, the question and answers are, there may be 12 or 15 things under how do you configure your MFA or how do you configure your passwords? Do they expire every 30 days? Are they more than this character's long? Do you have this? Do you have that? So it's no longer just a yes and no by any stretch. And you'll see all the functionality around these things in the question. And if you're not checking a bunch of them, you already know you're having a bad underwriting experience before you can get. And the final bit is Peter and I, and the way that brokers work, we bring cyber people like myself, and Peter has people on his team to translate English to English between your techs, your chief general counsel or risk officer, and the underwriters. So that's what a broker does. They make sure you're representing how you've wired your house well. And that's an important part of this process. If you have a misperception about insurance, call Peter, call me.
Yeah, I think, Brian, you make a great point. And so one of the things that we are seeing, some insurance companies are relying much more on these external scans than others. Mm-hmm. And, it varies by insurance carrier. We try and work with ones who, again, are looking beyond just yes, no check boxes and is this an open port or not? They want to understand. I don't particularly like a lot of these external scanning tools because I think we get a lot of false positives. Yeah. I work with like public entity organizations, higher ed, where they by design have a lot of open network access. So their scans, don't typically look that good from a high level. It doesn't reflect the internal network architecture that you're seeing.
It's like driving by your house and diagnosing the plumbing. It's not really.
Or the appraiser. I don't like the appraiser driving by, and I don't like how my house keeps going up in value because I haven't done anything new on the inside.
But aren't there companies popping up that are doing internal monitoring as a condition of insurance, right? And they're starting to combine insurance and MDR or whatever, MXDR.
And Mike, just like that thing many of you installed in your car to let your car insurance company know how fast you brake and accelerate. Yes, that trend will hit cyber in various markets in various ways. But here's the thing, a la solar winds. Now you've introduced another hole in the side of your submarine for somebody to be doing constant internal monitoring.
Yeah. And we don't, again, I represent the client. I'm trying to make sure that they have great coverage as broad as possible. I'm not a fan of what I would call dynamic underwriting, where they can come in and say, hey, you didn't patch something that happened during the policy year or something like that. That's not how we want. That's not a good partnership, in our opinion. And we want the carriers to be partners with us and partners with our insureds to respond to these risks. We do, however, and I'm sure Brian has a similar one, because we know some of these carriers are running these network scans, we have those capabilities as well and provide those scanning reports to the client before we even go to market. So we're ahead of the curve. We can address anything that happened that's open. We already have those answers when we're going to the insurance carriers and talking about them.
And I just want to say one thing to folks, which is some insurance companies call that, call those external scans a penetration test. They are not a penetration test. Okay. We'll talk about that. We could talk about that separately. Okay. Cost of a cyber attack. So I bring this one up because of how much you should be insured for. So cost of a cyber attack, everybody thinks about, yes, I'm going to have to pay for IR. I'm going to have to pay for security enhancements. I'm going to have to pay my attorney's fees, lost revenue, and things that people don't think of is some of the things on the bottom, the regulatory sanctions, what if I'm never going to pay the ransom. And then you get into it and, oh, wow, the bad guys have started calling your customers and your patients and you do decide to pay it. I can tell a story there where somebody did decide to. who said that they would never. And, the cost of the data breach on the right, healthcare is the most at 10 million, financial sector, 5 million, and on and on and on. So Peter, let me start with you. Looking at this, number one, if you're going out to get insurance, how do you decide how much to be insured for?
So that's a great question, Jake. And as an industry, we've done a lot to try and quantify cyber exposure, because me just saying you should buy more doesn't really move the needle. So we look at a number of factors here, and a data breach is just one particular claim scenario. But we look at all the potential exposure that you would have, from the incident response costs to the potential business interruption, data restoration, your third party liability, class actions, all those sorts of things. And it's based on your specific risk profile, which includes, maybe how many records you have, what type of records those are, industry class, size, revenue, and then also your controls. Your controls are a factor in deciding what amount of insurance you should purchase and what you feel comfortable with.
And, Brian, one, how do you agree? Do you agree with that? And then, and second, I want to add something to this, which I was just talking to a hospital association, and the hospital association found out that the hospitals in its area in general are, have $2 million in coverage. And yet we see $10 million as the cost for healthcare. How do you figure that out?
Okay, so one of the terms I want to introduce, and Peter hit on it, so I'm just reflecting a fellow pro, is there's a tapestry of insurance that you're talking about when you think about risk management. There's business interruption, there's cyber crime, there's cyber incident, there's dependent business interruption of your vendors. There's a lot more than just, quote, cyber insurance. So without going too far down that rabbit hole, it is a look at the enterprise risk. The other thing I'll say is the incident response is usually one of the smaller costs by the time all is said and done. It's like the water bill of the fire department to put out your house fire. Really not the most significant thing by the time you're all said and done with the class action lawsuits and downrange stuff. And enhancements. And Peter, I know, will flag this too. Insurance restores you to where you were. There's restoration is covered. Putting better toilets in the bathroom that got burnt down is not covered. You need to make sure that when you're doing your recovery and enhancements, those are separate invoices. You make sure not to commingle that. So there's 100 things we could talk about all these costs. But at the end of the day, the one question is, your coverage amount will be based on looking at all of these things, figuring out your exposures, and then putting together that tapestry of coverages and copays. You might say anything less than 100 grand, I don't want to bother insurance. Just like your deductible on your car collision. On a 10-year-old car, I can buff that bumper out. I'm not reporting this. I'm not asking insurance to indemnify me. You do the same thing in cyber. You figure out the size and shape of your policy and coverage.
Well, and so that takes me to Change Healthcare, because this was, it's funny. One of our customers said, "Stop calling this unprecedented." Like a third party getting breached and it causing disruption in an organization is not unprecedented. The size of this may be, large, and the fact that it has impacted so many Americans who haven't been able to go to the pharmacy to get their prescriptions may be larger than others. But it's not unprecedented. And so for this one, there are a couple of really interesting things. Number one, there are organizations that haven't been able to make payroll because they're not getting paid. Number two, they've had disruption in their organization that they've had to deal with. And number three, at some point, if it turns out, and it seems likely, that, patient information was taken, there's going to be a large disclosure. How, Peter, how are insurance companies figuring out what to pay for when organizations ask for help here?
So this is an interesting claim from an insurance standpoint. Normally, the first time you hear of a claim is typically the data breach part of it. That's how most of these kind of have happened. This one, we don't have that privacy piece yet, at least as of last night. I hadn't heard of whether or not they have come out and officially said, hey, that 6 terabytes of data that we took, guess what? It's got a bunch of PHI in it. Everybody's kind of assuming that it does, but we don't really know that for sure. So what we have here is, in most cases, it's a revenue issue or a lost revenue or an extra expense issue for the clients, the actual ones that have suffered the loss and are trying to turn these in. I'm going to set aside United Healthcare and Change Healthcare. Obviously, they are trying to figure out how to handle this as well. But for people impacted, for organizations impacted, those are the key issues that we're looking at right now. And most of what we're doing is talking to clients about getting the claims reported as a notice and monitoring or trying to track whatever the impact is of Change Healthcare outage.
And Brian, how are you seeing it?
So besides, there was some interesting layers to this. Besides just the direct, hey, did this cyber attack come up the wire? You've got the business interruption. And then the question is, were you resilient enough to have 2 payment processors or 2 processors for a hot swap in just this kind of thing? Do you have 2 cloud providers? The other question, I spent a lot of time in boardrooms, and I'll be very, very non-distinct about this for any friends or clients on the call, talking about when to hook back up. That Change says we're open for business, but they can't provide information because of the privileged breach response. And these organizations have to figure out, are they going to send a whole new batch of prescriptions over today? And what legal liability or controls, compensating controls, could they put to make sure it's the right prescription, that nothing's changed, that there's no invoice fraud? And I'm not saying there was, I'm not picking on Change or anybody involved in this. I want to be very clear about that. Those were the questions being posed.
Yeah. And, I do want to also bring up NIST CSF. So not related to Change, but this is something that has been in a bunch of places. So NIST CSF is associated with lower premiums. This is a study from the American Hospital Association class and our friends over at Censinet. And if folks aren't familiar with NIST CSF, this is actually NIST CSF 2.0. And it was just released this year. And this is what the federal government is pushing all critical infrastructure to align to. And one of the things we've seen is, there's now 2 studies that say if you align to this, you will have lower premiums and better insurance. Brian, how do you see that?
Well, yes, with a caveat, because the good behaviors of security that the underwriters look at was informed by the NIST, ISO, and other global standards. However, conversely, the new underwriters' questions this year will ultimately show up in a year or 2 as the newest requirement in the NIST, because that's how seatbelts, then airbags, then crumple zones, then side impact airbags. If you understand that process, you'll understand what NIST is. It's the output of what the claims and underwriters are doing. So you take the NIST standard as a market lagging thing, and you look at the newest underwriting as a market leading thing. And that's a great source of bi-directional intelligence for you as an executive.
Yeah. And Peter, have you seen this come up more?
I have. I would agree with what Brian said, but I would also say that we have seen much more NIST focus for those critical infrastructure, the organizations that are going to be subject to these, and really starting to do audits and try and get in compliance.
Awesome. I think that, we have one question that came up in the chat that we haven't hit yet. I want to get to that, and then we'll do some final thoughts and one more thing. Since folks sometimes leave before the end, I do want to give everybody the survey. We do a survey at the end of all of our events. If you have to leave early, take the survey now. If you don't need to leave early, wait and listen. Joe asked a question: is there a such thing as replacement coverage versus current standards coverage in cyber? If a customer is told they need $1 million to replace an old MRI machine that's bricked, what happens when they can't buy a replacement $1 million old MRI machine and instead need to buy a $2 million MRI machine? I mean, obviously this happens in car insurance. Brian, how does that work?
And Peter and I will both have an opinion on this, but it comes down to what are the specific coverage areas articulated in your policy? And in many cyber policies, equipment replacement up to a particular limit is one of the discussion areas. It can be a coverage area that you do, equipment replacement. They don't care about the cost of each laptop. They care about the aggregate of how much replace my equipment insurance you bought. So yes, you could have coverage. If your coverage is out of date, you only have $1 million coverage when you should have 3. That's where you and your broker need to talk not just once a year, but continually throughout the year to keep you and your insurance aligned on the state of your business.
Yes, I'd agree with that.
Yeah. And so, one of the things that I was going to do as we get to the end is usually I go through the services that we provide, but, just humor me for a second here, because we just helped a customer with this, where we, Critical Insight, help people with everything on here. We don't make the tools, but, we give advice on multi-factor authentication. We do provide managed XDR, and we provide advice on EDR and installation. We provide advice on disaster and backups. We provide advice on network segmentation and everything else on here. We develop incident response plans and do tabletop exercises. So, if folks will humor me there for a second, as you look at your insurance, whether you're trying to align with NIST CSF or whether you're trying to align with Brian's Dirty Dozen slide, this is a place where, where we help our customers. So, I'm going to put all of our email addresses up here. If folks want to contact any of us, there's there. I know some people want the slides and some other things. Go ahead and email me at jake@criticalinsight.com. But let's do 60-second final thoughts from everybody. We're going to go Brian, Peter, and then Mike. Brian, go ahead.
Thanks all for taking the time. It's a couple of hundred of you on the call today, and I know you didn't have that time to begin with. There's a lot of misperceptions. Insurance doesn't pay and other things. Absolutely follow up with myself and Peter to talk about understanding insurance. And don't do it last minute. Do it 6 months ahead so you have time to fix the things in your house, get the pen tests, update your policies, and have the best brokering experience. But cyber insurance, if you're not going to get cyber insurance, get the questions anyway. They're more important. If you answer them right, we'll pay for the problem. If you don't answer them at all, you're still paying for the problem. So either way, those are good questions. Thanks for your time. I look forward to catching up with some of you soon.
All right, Peter.
Well, thank you again for your time today. It was a pleasure talking with you guys. And thank you, Jake and Michael, for including me on this. I'll end with a positive note. If I have a property and it's in a flood zone, there's nothing I can do. The house is just in the flood zone. I can't move it. But for cyber insurance, it's not the case. You can improve your house. You can move it to a different place. And so that's one of the great opportunities that you have, is to be an active participant in your risk profile and improve it. Again, you're not trying to be, you don't have to be the best. You just have to be better than average, or even better than the worst, because it's a moving target, and the cyber criminals are looking for the lowest hanging fruit.
Awesome. Mike, final thoughts.
Yep. Insurance is getting much better at pricing this risk, but it's still up to you to minimize that risk to get the best coverage and ensure that there's a high likelihood of a claim being paid out after one of these events. So, work to minimize both the likelihood and the impact of these events, and aligning with the CSF is one really good way to show you're serious. It is an outcome-based framework, so ensure that the outcomes align with the specific insurance control recommendations, and you're going to be in great shape.
Awesome. All right. Well, everybody, remember that the survey is in the chat. We really appreciate when folks take the survey. Our email addresses are up there. I see all of the emails pouring in asking for the deck and the video. The video will be on our YouTube channel, Critical Insight YouTube channel. On behalf of Brian and Peter and Mike, thanks everybody for joining us, and have a terrific day. Goodbye.
Thanks, Brian. Thanks, Peter. It's good hanging with you.
Back at you. Thanks.